Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts, and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome back, everybody. Let's take a look on the gold market. So last week was not as dramatic for the gold as for example, euro currency. This was brought some volatility, but in general, market remains around the same 18 even area. So this is, we could say, that some achievement for the gold is because we've got actually a few bearish moments that gold tried to resist to, and it was more or less successfully. Still, in the short-term perspective, we think that gold should remain under pressure. So we have dedicated lots of attention to this moment in our today's weekly report. It was a really interesting report, guys. We spoke about geopolitical tensions, how it could make impact on China, how it could make impact on the gold market in particular, and in general how the geopolitical strategy of the United States works against China. And we have brought some more information. It seems that it really brings some fruits. And that makes us to think that gold should remain positive in the long term. We think that the last bullish word is not said yet. So when we think that somewhere closer to the 2023 and within the perspective of the 2-3 years, its gold should start rebounding, because long-term factors just significant uncertainty, big geopolitical tensions, which should become the supportive for the gold. And it's also the big question whether Fed will be in time to hold the inflation, and whether the Fed measures to hold the inflation will not hurt the recovery. This is really the razor-thin way when the Fed is going on. And I think that, it's two big risks currently around the global economy and a policy that should support the gold market. So you could read the report and see what the particular factors we suggest should become the drivers for the gold in the long term. But first, and in this year mostly, situation should become worse before it could become positive. Why? It's just because all this screaming and turning and twisting around this new Fed policy, new Fed measures, recent European Central Bank statement, it's very fresh information that should be yet adopted, and it is currently takes the dominant role in the media space. And all this information mostly is bearish for the gold. It's rising interest rates here and there, so rising real interest rates, more or less positive growth in the economy. So that is the headwind for the gold. And since the Fed is just stepping in this process, it's even the first step has not been made, it will make impact for the gold market for some considerable period of time, approximately till the end of the year. And that's why we think that before the real reversal starts in the gold, we should get more or less significant drop, pullback, and the impact of the purely financial factors, such as the rising interest rates and rising the rate of the Fed. So, currently speaking, on the daily chart, situation still remains bearish. So because we have the bearish trend, we have the bearish pattern, which is a flag after the collapse. Don't forget that this is actually a bearish reversal candle on the weekly chart, which is really significant. And market shows, just technical bounce up from the support. So this is difficult to treat as the reversal, something of that sort, right? So this is more some kind of the consolidation, something of this type of action, but in opposite direction. That makes us think that although gold could try to climb slightly high inside of the flag, probably chances for next downside action looks preferable currently. Besides, market currently not oversold. So in general, overall performance on the other markets and cross-market analysis, you could see also stands, well, not positive for the gold market. So in general, you could see on the 10-year yield rate has jumped up on the non-farm pros release, and actually our target is completed. And only appearing of this butterfly on the weekly chart could trigger some pullback on interest rates, which could support some upward action on the gold market. But in the longer term perspective, with this upward action, it should continue. This is first moment. Second moment, by taking a look at the real interest rates, which is more actually important for the gold, you could see what's going on interest rates. Real interest rates, they are rising. It's actually coming to the 0 point, turning to the positive area, which will be direct pressure on the gold price. Finally, recent commitment of traders report shows the massive contraction of the gold market position. So approximately 10% of the all positions have been closed in the last week. There's the hedgers and speculators. Speculators are mostly going to the short positions. They close the really big amount of the longs. But hedgers were closing both the short and longs with the domination of the closing position against the gold appreciation. So currently the hedgers, the long-term players, do not believe that gold could show more or less significant appreciation. That also makes us think that yes, we could get some upward bounce, some upward retracement, deeper action here inside of the flag, but hardly it will be consistent, and it probably will be very short term. That makes us consider on the hourly chart an area around 1820, 1825 area. So by the few moments. First of all, here we have the cluster of the targets, taking into consideration all the bearish signs that we discussed, bearish factors. It seems that the upward action is exhausting, because it doesn't show any thrusting actions, mostly looks like the retracement type of action. We also have the divergence in place on the hourly chart. And around 1820, 1825, we have the big cluster of the destination point. Whatever pattern you will choose here, whatever it will be formed, all of them leads us to this area. So first is the major ABCD pattern. OP stands 1819. Minor, this magenta ABCD pattern based on the engulfing that we discussed on Fridays. You could try and take the position on the 618 supports, works nice. But anyway, this also has OP at the same area. If we suggest that it might be maybe the free drive or something that sort of market could try to climb slightly higher, anyway it leads to the 1823. So all target stands in the cluster of the agreement around the OP 1820, 1825. And as a result, with this upward action, we could get big garters, triple to sell on 4-hour time frame chart, even on the daily chart, it might be visible. So this is the area that we need to keep an eye on and see for the possible bearish reversal around this level. That's what we intend to do on the coming week. If we will get something and real bearish reversal here, that might be interesting points to consider the short entry on the gold market.